All right, so Ben, when we're looking at these Chinese equities, is all the good news priced in? Is there just more upside, and how much of it is it depending on a permanent deal? Are investors a little cautious right now because it's only a temporary deal?
I take the opposite view. I'd say a lot of the bad news was priced in. I mean, our ETF is nearing its all-time highs this year. If you looked at the numbers, for instance, even kind of pre-tariff war, it was, a 4-to-1 ratio of Chinese imports into America versus American exports into China. And so if you actually look at the true fundamentals behind a lot of these Chinese companies, they had limited exposure to the U.S. or they were suppliers to an American supply chain. And so really actually limited, a lot of headline noise, but not a lot of fundamental impact on the performance of these businesses at a financial level.
We're looking at the U.S. and U.S. companies and Saudi Arabia, and looks like we might see more in the Middle East. What does it mean for some of these Chinese companies? China and Saudi Arabia, they have pretty friendly trade, terms right now, and they're trading partners. Are we seeing basically the U.S. push China out of the Middle East?
I think that's true, but again, the Middle East is still a relatively small market for China. They were obviously much more excited about Southeast Asia, South America. Meituan, for instance, just announcing yesterday a $1 billion investment into Brazil. So the Middle East is kind of a very hot market and one that moves very quickly because it's very top-driven. But at the end of the day, Saudi Arabia is the size of Germany in terms of GDP, and so it's easy to kind of get lost in the headlines. But I don't think that you're going to see a full displacement. But certainly, America needed to come back hard. China had really taken significant advantage over American retrenchment from the Middle East, and I think President Trump did a fantastic job of coming into Saudi Arabia and bringing the best of America with him and striking a lot of those deals that were long overdue.
There's a lot of talk about supply chains moving away from China, companies sourcing in other parts of the world. Now with this temporary deal, and I think there's a lot of hopes there's going to be a longer-term deal, does that dynamic and that narrative change, and does that benefit the stocks?
Obviously, people in their supply chains hate volatility, and so it still doesn't feel like there's a huge amount of predictability around the trade dynamic. As you know, trade wars aside, China was already, getting quite expensive as a manufacturing hub, and so already without all the tariffs and just from a very natural evolutionary perspective, a lot of that stuff was going to other parts of South Asia, Southeast Asia. So I think that trend is secular, but certainly having stability in the relationship, having really great people on the American side like Treasury Secretary Scott Bessent, really providing a stabilizing ballast to this relationship, I think gives people more continuity and support for longer-term investments.
All right, so Ben, I'm just assuming here, but it seems like you have some optimism of a longer-term deal because you said right now is a good time to look at companies that have a big presence or they get a lot of their sales from the U.S. You gave us two names that I don't think a lot of U.S. investors know. One is Anchor. They get about 50 to 60% of their revenue from the U.S. The other is Kai Vacuum. They're a supplier for brands like Stanley. So you think right now is a good time to invest in these companies that have big U.S. exposure?
These were names that we've seen jump in the last few days because they really were living on a knife's edge as it pertained to to exporting their products into the United States. But as you know, the American supply chain is still very much dependent on China from a pharmaceutical basis. For instance, 70% of inputs coming out of China in the automotive space, of course, in the electronic space. And so I think anyone who is still reliant on Chinese core inputs for their supply chain is going to see a nice boost over the coming days.